US and European shares did make gains overnight. It does seem like the Dubai debt crisis has been avoided for now, with the Abu Dhabi government offering a bailout package for its troubled property developer. This has really helped with confidence levels in global markets. The trouble has been that people have been fearing that this may cause a domino effect in global markets and cause some problems for an already fragile global economic recovery. The other big news has come from the US, where Exxon have announced a $31 billion acquisition for XTO Energy. XTO is a gas company, and it's a clear bet from Exxon that they see changes to US legislation. The speculation is that more energy will have to come from gas as opposed to carbon-intensive coal. Last week, it was also interesting to hear the third quarter earnings result from US supermarket Kroger. Kroger have suggested that their margins have been hammered down in this third quarter, as all US supermarkets have been targeting consumers who are feeling a little bit more cost conscious. This has really hammered their margins down over the past few months. In other news, McDonald's is also feeling the effects of this current economic environment. Earlier on in the recession, they were doing pretty well as people traded down from the restaurant trade down to fast food. However, over the past few months, they have also seen that people have been trading down from their own fast food restaurants down to supermarkets. This does provide some context into what consumers are doing in the major economies. They are looking for the lowest cost store items, but also now for the lowest cost food items. On the currency front, the New Zealand dollar has traded up slightly overnight, and on Tuesday morning was trading at 72.80 against the US dollar. There has been some better news for the New Zealand lamb industry over the past week. It does seem like production will be well back in the main producing nations over in Europe this coming season. In France, production is forecasted to decline by 1% this year, while in the UK it is forecasted to decline by 3%. Lower global supplies will go some way to offsetting weaker demand in the main consuming nations. Here in New Zealand, scheduled prices have been edging back over the past few weeks. The New Zealand dollar continues to be very strong against the pound, and this is causing some problems. Slaughter has been down early in this season, and it is likely that it will ramp up as the season really takes hold. This will put further pressure on already weakening New Zealand lamb schedule prices.